Hello and welcome to Property Hotline on India's first property channel, Magicbricks Now. I'm Kavita Krishnan. Today we are answering all your home finance questions. Our guest for the day is Harshil Mehta. Harshil is the CEO of DHFL. Harshil, welcome to the show. First up, let's take a website query. Now, Amol Pawar has written in. He says he wants to take a home loan of 25 lakh rupees. He's received sanctions from Indiabulls Finance and Axis Bank. He also has an ETF sanction from PNB. Now, PNB has agreed to give him 100% loan on the agreement value at a fixed rate of 9.5%. Axis Bank, on the other hand, has agreed to give him 90% loan amount at a floating rate of 9.45%. Now, should he choose PNB or Axis Bank? Also, what is ETF approval? That's a question that I have for you.
That's a very good question, Kavita. Quite honestly, I would not know what ETF would mean, because chances are that it could also be related to specific to that bank. I don't know. We have heard usually of an in-principle sanction letter or something like that. Amol, I think you are spoiled for choices here. You have so many sanctions. Quick three comments I would like to make on your query. One is, firstly, what is the loan amount you are looking at? Because, if you are looking at a higher loan amount, then again, the choice is very clear. But the second aspect is, if you look at the macro environment today, you see interest rates largely on a southward trend compared to what we used to see a few years back. In that scenario, would you really like to lock in a fixed interest rate? That's something which you may really want to consider. Third thing, I think, which is more important, is how about the prepayment penalty charges when you want to make prepayment in case you choose to go with a fixed rate of interest. Because if you want to make a prepayment in a fixed rate scenario, chances are that there will be prepayment penalty. As against when you make a prepayment penalty in a floating interest rate, there are no prepayment penalties. So these are the top three things you may want to look at, Amol, before you finalize with whom you would like to go ahead and establish your relationship on the home loans part of it.
Also, Harshil, now there is one bank that is giving him 100% loan. The other bank is giving him 90%. And in fact, it's quite a difficult choice over there, if you ask me, because the fixed and float, the guy who's giving him the 100% loan is also giving it at a fixed rate. The floating rate is the guy who's giving him the 90% loan. So shouldn't the loan amount also be one of the factors that he should consider before going in for
Yes, absolutely, Kavita. That's true. That's why the first thing I commented is, what is the amount you are looking at? What is the amount Amol is looking at? And basis which, he can decide. But then if he decides that he wants to go ahead with a higher loan amount and then a fixed rate of interest, then these are the parts which also need to take care in case of a prepayment. Because usually we have seen in case of home loans, cutting across the industry, people start have a tendency to start prepaying at least after 4 or 5 years, and this is where this fixed rate comes into the picture.
Right. So very, very important thing that you need to remember, Amol, that if you do go for a fixed rate loan, your interest rate will stay constant. Yeah. However, if you choose to prepay that loan, you will have to, give a prepayment fee as well. However, a floating rate loan, and that too in a scenario which, like Harshil just pointed out to you, where interest rates are expected to soften further, chances are your loan might just get cheaper as with time it might just go down. And what we're showing you right now are the interest rates that leading banks and HFCs are charging currently for home loans. And you can see what you're getting is more or less a market average, though there are a couple of banks or HFCs who are giving an interest rate that is lower than what is currently being offered to you. So, look at that and take your pointers from there and base your decision on whatever we've told you. Let's move on. We have a Facebook query next. Ramesh Tiwari has written in. Now, he says that he has a net take-home salary of 65,000 rupees, excluding HRA of 10,000 rupees, which is being deducted by the government every quarter. How much home loan is he eligible for?
Mr. Tiwari, the ballpark which we use for eligibility of a home loan is, whatever is the take home annualized 5 times of that. So in your case, on a ballpark range, we are seeing that it can be close to anywhere between 45 to 47 lakh rupees. Again, assuming here that there are no other loan obligations which you have. So this is how, a typical calculation is done, 5 times your annual salary. So that's how it comes to.
5 times your annual salary, Harshil, is what you would lend, you would typically lend to a person, right?
Yes.
Also, from a personal finance point of view, if I want to take a home loan, how much of, if I look at the EMI that I'm going to be paying out on a monthly basis, say for the next 20 years or so, how much of a portion of my income should that EMI ideally be?
See, the way normally any bank or HFC would do it is, on the basis of your take home, you would typically say that on that about 50 to 60% of that, if it goes for EMI, you're okay. Anything over above that, then you start looking that it, it's getting highly leveraged, because then there is that disposable income which has to go towards your day-to-day expenses. So that's how typically you.
And this 50 to 60% should be all your EMIs put together, not
yes,
just
absolutely,
the home
absolutely.
loan EMI.
Yes,
right.
Absolutely.
So 2 key numbers that you should be remembering if you are in the market for a home loan. You are eligible for a home loan which is 5 times your annual take-home salary. However, how much of a home loan can you afford? Your home loan EMI ideally should not be more than 50% of your monthly take-home salary. So those are 2 things that you need to remember if you're in the market for a home loan. Let's move on. We have an email query now. Roshni Sethi writes in, says she purchased land for 20 lakh rupees and registered it 4 years ago. Now both she and her husband are employed. She asks if it's possible to avail a home loan for building a house on land. If yes, what is the correct procedure to do so? It's a very interesting question. You generally take a home loan to buy a flat. Can you build a home?
Absolutely, Roshni. I think, chances are that every bank or a housing finance company would be more than keen to give you a loan. This would be called as a construction loan. So what you need to do is you need to approach the bank or the housing finance company and put in a request for a construction loan towards the land which you have purchased. And as a process, what will happen is the first they will do your credit underwriting to see how much is the eligibility. And from a construction loan perspective, there are various things they would ask is actually the map, the approvals, and a construction estimate, basis which they will sanction the loan, basis which they will go ahead and disperse the loan. So yes, absolutely, you can get a loan for construction if you own the land. The one thing you need to remember is the bank or the housing finance company will necessarily take that land as a security, which means that the title of those land which you own will have to be submitted to the bank or housing finance company as a security for taking the loan, because this is a secured lending.
And getting the approvals, etc., you'll get that loan only once you have all the approvals and the sanction plans in your hand. Otherwise, you don't get the loan, right?
Yeah, absolutely.
Also, one more thing, Harshil, once you take the loan, once the loan has been sanctioned, how soon do you need to start construction on that plot of land?
Yes, very, very valid question, Kavita. See, once you take a construction loan, then within 3 years you have to do the construction, failing which that loan can get classified largely as a commercial loan, which means that the interest rate on that tends to go up. So you have to start the construction within 3 years of taking the loan.
Okay, so you can avail a home loan to build a house on a plot of land. It's called a construction loan, and once you get the loan, you'll have to start construction within 3 years of availing that loan. Right. Moving on, we have Kinali Mehta. She has tweeted in a question. Now she says that she's a single woman, wants to avail a home loan with her married sister as a co-applicant. Is this possible?
Kinali, absolutely, this is possible. You can apply for a loan as the main applicant, and what normally a bank or a HFC would do is they would take your married sister more as a guarantor to the loan and not as a co-applicant to the loan. So yes, but to answer your question, yes, you can apply for a loan with your sister coming in as a guarantor.
So essentially what you're saying here, Harshil, is that Kinali has to get that loan on her own Form 16, on her own steam essentially. It will be based on her salary and the money that she brings to the table. She cannot really, I mean, when you take a loan with somebody else, as a co-applicant, then typically the incomes are combined and you get your eligibility goes up. So that will not happen in Kinali's case.
Yes, you are right. But Kavita, it's not always the case that a co-applicant is always there for the sake of income. Sometimes you have co-applicants because many times the property is to be registered in the name of the co-applicant. So it's not always necessary that the co-applicant has to have an income. But yes, in many cases, for example, a husband and a wife or two brothers apply for a loan and the incomes are also clubbed. But in this case, because she is married, usually bank or HFC would say that she would come in as a guarantor.
Okay. And can Kinali get a loan on her own steam? I mean, without going in with her sisters, can she get it on her own?
Oh yes, absolutely.
How open are banks to lend to single women?
I don't think there is any discrimination with respect to that. As long as you meet the criteria with respect to the income eligibility, like any other loan, yes, you are eligible. What happens is you normally need to have the second of the key, as to in event of anything, who is the next person, so usually you do it this way, and this guarantor is not necessarily a financial guarantor. It's only to that. See, you come across NRI loans. The only thing is, in that case, you need to have somebody who is locally available so that in any situation you are immediately there to approach them.
Okay. One quick question before we move on. But two sisters, do banks lend to them? Because generally what I've heard is banks are averse to lending to two sisters as co-applicants for the loan.
Kavita, that's a tricky question, I must admit. But yes, usually two sisters coming in as together for the loan, it becomes trickier, because in an event of a marriage and then splitting of the property or anything like that comes up, then it becomes sticky when it comes to servicing the loans. So usually there are ways and means which we basis which we go and do the loan. So it's not that it's complete no. But yes, you have to kind of structure the loan around it to make sure that it goes through.
Right. So Kinali, you can get a loan with your sister as a guarantor, not with your sister as a co-applicant. If you get your sister in as a co-applicant, then things could get tricky, like Harshil just said. But as a guarantor, where she doesn't have where she is not taking on the financial liability of the loan, any bank will be willing to lend to you. Let's move on now. We have Manas Rege, who sent in a question on our Facebook page. Now, Manas says that he's a private sector employee with a salary of 14,000 rupees. The salary is not, however, credited to his account. His wife works as a government teacher and earns around 13,800 rupees. His mother draws a pension of around 14,000 rupees. Can he get a loan? If yes, how much? What is the procedure that he has to follow?
Mr. Rege, absolutely, you are eligible for a loan. You can apply for a loan, and yes, you can have all the three incomes combined, you coming in as the main applicant, your wife as the co-applicant 1, and your mother as the co-applicant 2. When you combine all the three incomes and basis what I just mentioned 3-4 questions ago, annualize it 5 times, in which in your case, if I do the calculations, it comes approximately anywhere in the range of 25 lakh rupees is what the eligibility is. But again, one thing we need to see is In case of your mother, since she is a pensioner, so there could be some amount of eligibility criteria in terms of the tenure. It depends, what her current age is, because typically one would go up to the age she reaches would be at 70 years. So that's how the tenure would be fixed, and that's how the eligibility would be calculated. So that's how it is.
Right. Manas also says in the question he's also written in that his salary is not credited to his account. So in cases like this, will documentation for the loan be an issue? What can he do to really solve that?
See, yes, in fact, he did mention it very clearly that it's not coming in the bank. So what happens in that scenario is, as against in case of his wife, who is a government teacher, which means that the salary gets credited, you just get the bank statement and the salary slip and you just match it. In this case, there would be an additional leg of work which will be done, which means that, going to the employer and checking the records over there to see what kind of salary he is getting, and then you kind of match it up.
So yes, you furnish a salary certificate from the employer.
Absolutely. So it's not that it is a very long winding up procedure. You may have to go 2 more steps to do it, but we keep on doing it all the time.
Okay, so salary not being credited to your bank account shouldn't be a reason for you not getting a loan. There are ways to get past that as well. Let's move on to our next question. Question that's coming on our website, www.mbnow.in. Anil Kumar says that he took a home loan from LIC Housing Finance for 15 years. He's already paid EMIs from October 2012 to June 2016. He wants to know if it is possible to prepay the remaining amount of his loan. He asks what are the rules that need to be followed in case of a prepayment.
It's a very simple answer to this. The only rule which you need to follow is just walk up, write the check and give it to them. That's it. Yes, since you have been servicing the loan for so many years, you can definitely prepay. And there are no rules unless and until you have taken a loan which is a fixed rate of interest, which I mentioned earlier in the show today. Otherwise, there are absolutely no rules with respect to part prepayments or even, for that matter, foreclosure of the loan.
Right. In fact, I was just about to bring that up. He's not mentioned whether it's a fixed or a floating loan. But typically, when you foreclose a fixed rate loan, what is the prepayment charge that banks or HFCs ask you to pay?
See, Kavita, that usually differs from bank to bank and HFC to HFC, but I would say that it would be anywhere in the range starting from about 1% to 2.5–3%, anywhere in between that.
1 to 2.5 or 3% of the entire loan amount is what you would need to pay as foreclosure charges if you've taken a fixed rate loan. We have a caller now who's called us. Khozem Dholkawala's called us. Khozem, go on. How can we help you?
Hello.
Yes, Khozem, tell us how can we help you?
Actually, I had taken a loan in 2007 from PNB, and which was transferred to then HDFC.
Okay.
So it's still going on, and I am paying a very high interest rate on that.
How much are you paying, Khozem?
Interest rate?
Yeah, how much interest rate are you paying?
Before it was 13.225 something.
Okay.
And they have reduced, but it is hardly 0.5 something, which comes to 13. Now it is 1290 or something. So I feel it's on the higher side, which is not acceptable, and to the current rate, which is very somewhere about 9 point something. So,
right, Khozem.
So my question is, what should I do in this case?
What should you do? You obviously need to switch that home loan. What do you say, Harshil? He's paying 12.9%.
It's so simple. Khuzam, all you need to do is give me your telephone number so I can call you up and say, hey, transfer the loan. That's as simple as that. At this rate which you are paying, Khuzam, I think you have to just do a balance transfer. But one thing I must tell you that when you do a balance transfer, the other bank will definitely look at the repayment track record with respect to your loan. So if you have a absolutely clean, swanky repayment track record, they would actually welcome you with a red carpet welcome. And chances are that they would also offer you a top-up loan. And if you are running some other loans which are high interest rate, which could be your two-wheeler loan, personal loan, you can use the top-up money to prepay those loans and transfer it to a low interest rate home loan.
Right, and Khozem, to make your job a little more easier, we've already shown this chart once on the show today. Let's show it to you again. These are the interest rates that most banks and HFCs are charging at the moment. There it is. As you can see, most of the rates are averaging around 9.4 to 9.5%, which means you are still, despite the fact that your home loan has become a little cheaper, it's still way too expensive as compared to what are the current rates in the market.
To the same bank, they will not reduce the loan.
No, Khozem, you can walk up to your existing bank also and ask them for a change in interest rate. This is typically called as a switch fee. Switching the loan from a high rate of interest to a low rate of interest. There could be some nominal switch fee which would be applicable. But see, even if you do a balance transfer over there also, you will end up paying processing fees. So there could be a small amount of switch fee which could be payable. But yes, you can always ask your existing banker for transferring the interest rate on a lower end.
Harshil might not like this right now, but let me tell you one thing, Khozem. What I suggest you do is go out in the market, see what other banks, what other HFCs are willing to offer to you, considering your track record, considering your CIBIL score, etc. And then go back to your existing banker and say that, hey, look, this is what others are willing to offer, and I want to switch. I want to move my home loan to the other bank. Chances are, your own banker will turn around and give you a better deal for all you know, right? So try that. I guess it should work, right? But you need to move that home loan and you need to do that fast. Moving on, we have a Facebook query coming in. Kamini Singh says that she's a chartered accountant who started working in May 2015. Now she plans to buy an old house that costs 11 lakh rupees. She asks if she can get a home loan for this. She adds that she's planning to do some renovation and wants to furnish this house as well. Can she get a loan for this too?
Yes, of course you can. You are eligible for a loan for this. You are a chartered accountant, so you are a professional. And if you are doing your own practice, you would be, getting, consultancy fees for that. So basis that, on what kind of, earnings you have, you will be eligible, and that's how it will be decided on the loan amount. Now, there are two things here. You said here that you are taking an old house. So, after the sanction on the disbursement side, it would see that it is also dependent on the residual life of the old building or the old house, because if it is, let's say, for example, a 25, 30-year-old building, then the residual age would just be about another 10 years or 15 years. So even though you may be eligible for a loan, you may not be able to get a tenure more than the residual age of the building. So that's number one. Number two, you can, yes, definitely get a loan for renovation, but not for furnishings. So you have to keep these two things in mind.
So as a banker, how comfortable are you giving a loan to buy a home in an old building, and how old can that building essentially be?
See, Kavita, there is no exclusion with respect to that, you would not do. any property which is really old. It is only a question of what is the residual age. Typically, in urban areas, one would look at a life of the age of the property anywhere in the range of 40 years or so.
Okay.
So, if it is 30 years, then you will say residual age is about just 10 years.
Right. Right, with that, let's move on. We have Wilson who's called in from Qatar. Wilson, how can we help you?
Sorry?
Wilson?
Yes.
Yes. Tell us what's your question. How can we help you?
Yeah. So my question is, I have bought an apartment in Mumbai 2 years back,
Okay.
and I've taken a loan from HDFC, around 25 lakhs. So now I would like to know, is it good to prepay the loan after 2 years? Because as far as I understand, in the initial 2 or 3 years, you pay most of the interest. So I would like to know, is it good to pre-closure the loan after 2 to 3 years? Or is it better to leave it till the tenure ends, which is around 10 years?
Right. We'll need a very quick answer for that, Harshil. We are completely out of time on the show.
I understand. Wilson, for this, you need to look this from a perspective of whether you want to use that interest for your tax savings. Otherwise, if tax, taking a tax rebate is not too much of an issue, then, and if you have a liquidity at your end, maybe you can, then the best thing is to just part prepay or foreclose the loan. But if you want to take the tax benefits because you are paying high interest at this point of time, then you may want to continue the loan so that you save on your taxes. That's the long and short of it.
So approach it from the point of view of tax. If you want to save taxes, then do not prepay. Otherwise, you can foreclose the loan. That's all the time that we have on today's episode of Property Hotline. Harshil Mehta, thank you very much for coming in. If you have any questions related to real estate, and with that I mean anything, it could be buying, selling, investing in property, it could be legal issues, it could be taxes related to real estate, or home finance queries like the ones we answered today, get in touch with us. Contact details are on the screen. You can also personally tweet to me. I'd love to hear from you. Keep watching Magicbricks Now.
You can watch live TV on our website mpnow.in. Find us on Facebook at facebook.com/magicbricksnow. And don't forget to click the like button. You can also follow us on Twitter at magicbricksnow. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/magicbricksnow.